Simplicity is about subtracting the obvious and adding the meaningful. John Maeda, my friends, we have made this as simple as we can with these charts. Heikin Ashi candlesticks volume. You see the average volume metric there, which is the black line that helps us see how much trading's been going on during the week. And of course, our trend line. Let's jump into these charts. Don't forget, markets are closed on Friday. This is a shortened trading week because of the Good Friday holiday here in the Christian world. And we will resume markets on Monday. So let's jump into these charts and see where we are. Stocks are mixed. They're really flat. The S&P is up just a little bit, 0.14. The NASDAQ is down just a little bit, 0.02. So they're pretty much flat. And of course, going into the Easter holiday, you can understand that. So let's just look overall at where things are. I'll give you the probabilities, the backtest accuracies, and tell you where we stand here at the end of this shortened trading week here in the spring of 2025. Now, remember, my friends, we had the markets top starting back in January, at the end, toward the end of January, all the way through mid-February. Then the rollover started on the 24th of February. Now, of course, when Trump announced the tariffs, it was no surprise to everybody. Oh, markets are down. Markets have been going down. They did crash very hard for 2 weeks. And then, of course, popped back up when Trump put the tariffs on hold. That was back on Wednesday afternoon, the 9th of April. We've seen things move up and then have slowly started to, well, I mean, not slowly. Over the course of the last few days, they've slid sideways, and we can see where, again, they're losing some energy. I will tell you where our analysis comes from. Let me find that. What we had written up here. I found this to be very interesting. As we look at where the markets are, where they have come from, our 1 week chart shows a strong trend, and the recent action shows that we are coming into some, again, bearish times. The prediction is that we're balancing the broader bearish trend on the weekly and 2-day chart with a short-term reversal signal on the 195-minute chart, and we predict a short-term bounce before resuming the downtrend. So where does this lead us? Well, where we are as we end the week on our charts is on the S&P, we are at a 60% probability of some up move before resuming the downward trend. Now you can see where we had things go down for weeks, and then this week we have a green spinning top. That's not a recovery necessarily. We can see on the 2-day chart, the Friday, Monday, the Tuesday, Wednesday, we see here on the Thursday as things started to weaken, and we're sitting right there on the weekly trend line. The weekly sitting on the weekly trend line. Half day's gone over it and started to move over. So again, we still have this inherent weakness in the market. Our backtest accuracy is about 65%, but it's a coin toss on whether it's going up or down. So what do? Well, you keep your powder dry. You're not out there throwing practice trades. And again, we're not a stock calling service. We're an education firm. But you're not out there trading on an up move when you got a 60% probability. You're keeping your powder dry, hanging tight. That's about a ditto for where we are with the NASDAQ 100, the tech stocks. Even less of a directional probability, 55%, much closer to a coin toss. Backtest accuracy is only 60%. And again, don't see much of an up move. And as we look at our analysis, our prediction, very similar. Short-term bounce, likely due to oversold conditions, but broader trend remains bearish. So we'll see. Can things recover? Sure they can. Can things turn around and head up strongly? Sure they can. Are they likely to do that? No. And when we see that bearish predictor really kick back in, that's when I'm going to feel better about going short. Don't forget, the short-term charts on the S&P 500, that's SH. You can see where it just gangbusters for many, many weeks. Short-term chart on, and these are inverse funds, okay? Short-term chart on the NASDAQ is PSQ. Now, those things are fraught at times with difficulties. They're inverse funds, okay? They're traded by market makers who are using derivatives to follow the market in the opposite direction. They are set up, and like clockwork, if the S&P 500 goes down 1%, then SH goes up 1%. Costs are higher. They're recalculated on a daily basis. You need to practice trade those things, but it's a great time if the market does roll over again and starts heading down to practice those and see if you like them, because it gives you options when everybody else is running for cover. You're making money when the market goes down. Need to practice that. Okay, let's see where we are with 20-year U.S. government bonds. 70% down probability is what we have. We've got a 75% backtest accuracy. We don't have much of an expected move. 64 cents on an 80, what are we at? 87.56 right now. Not anything I want to be throwing a lot of shekels out there to capture just a tiny little move. But as we look at where we are, I can tell you that our prediction is the broader trend is bearish. 195-minute chart lacks a clear reversal signal. Downward direction is about 70%, but for not a lot till it hits resistance. Let's look at gold. Of course, we've been up on gold strong yesterday. Great up day on gold. We did so well. 3+%. We told you that was coming, and of course it did. As we look at where we are now, gold pulled back a little bit, 0.44% after that 3+% up move yesterday. Where does that lead us? Well, we're still up on gold, 75%, 80% backtest accuracy. We see another $2.50 or so of possible up move as gold continues to, again, stay strong. Look at this week, just incredible. Look at the last 3 two-day candles, 4 two-day candles, just incredible. So again, we saw where gold punched up in the afternoon, and well, it punched up both morning and afternoon on Wednesday, and then started off slow and really didn't do anything throughout the course of the day on Friday. Probably some people cashing in some of those gains. Anyway, that is where we are on gold. We're still bullish on gold. Now, let's move from gold to Bitcoin. Where are we on Bitcoin? Well, Bitcoin was up a little bit for the day, 0.71%. As we look at it, and you can see where it's been sliding sideways for the last several days. You can see on the 2-day chart over these last, it's really not done much over those last 3 two-day candles. This week, a green candle, but again, just sort of sitting there, not a lot going on with Bitcoin. As we look at our analysis on Bitcoin, you know, we see that the prediction for us is broader trend is bullish. 195-minute chart suggests a bounce. And again, the upward directional probability where we are right now is around 70%. But again, for about 42 cents, 75% backtest accuracy, waiting for Bitcoin to show us if it's really going to get that energy to gin up and carry on. It's nice to see it ending the week with a green candle. You know, we had a down move, the interim low last week, a green candle this week. We'll continue to watch and see. And if Bitcoin catches fire, of course, we'll be there to march along with it as it gains back. Don't forget the inverse fund on Bitcoin, BITI. And we have had fun practice trading that over time. So that is where we are as we end this shortened trading week, as we get ready to get into the new week after Easter. Hope everyone has a wonderful holiday. We always love to hear from you. CW@chartingwealth.com. If you want to get the trading grid each and every day, that is our trade execution summary grid that has the ticker symbol, the directional probability percentage, the entry point, the exit point, the expected move in US dollars, and the backtest accuracy percentage, then you just need to go to chartingwealth.com, sign up for free. We'll get it to you. God bless, my friends. All the best from the whole team at Charting Wealth.